we've got no change. Give us a sense of the thinking out there in these febrile times for your economy at the moment, with it facing all sorts of headwinds, as we discussed before.
Thank you, Rish. It's always a pleasure to be with all of you. We are holding rates because we believe that the last tightening cycle, which started a few months ago, is still being responded to, and we don't need to make any changes right now. We see the response being that there has been a gradual increase in the interest rates. We have seen the government able to manage its finances with the current conditions in place. We see private credit growth rising, and we don't want to dampen it too soon. We also see that the growth momentum is back again after the lockdown was removed. So with the global conditions also moving towards the benign levels, and tourism once again being a very real possibility in Sri Lanka, we think holding the rates would be the best option for us to go forward, and that's why we have held the rates.
Are you comfortable with the exchange rate as well? It's not exactly been the best performing currency, quite the reverse, in this part of the world.
Yes, this year our exchange rate has depreciated by about 6.8%, which I believe is somewhat higher than what we should have had. At the same time, we are conscious that times are difficult, and then there has been some perceptions out there which has pushed the exchange rate to depreciate faster than we would have wanted. So we are working towards ensuring that there are new non-debt inflows as well as new G2G kind of inflows to take place, which would assist us to pull back the exchange rate gently so that the conditions would be much easier for the debt repayment as well as for the government's drive to ensure that prices remain at reasonable levels for the people.
Well, that's not been the case, has it? That's one of the issues that you really are having to face, and that's one of the reasons why you might have hiked. But with all that behind you, let's also just take a look at how inflows are coming in. You mentioned tourism coming back. Well, what's the sort of window for that? And if it does actually meet your expectations, does it mean that your debt repayment efforts will be back on track?
Yes, very much so. We are expecting the G2G inflows to be quite strong during this quarter. We are expecting to even be stronger next quarter. Tourism would be back by December, according to our estimates. Sri Lanka has vaccinated more than half its population and almost the entire population above 30, which makes us responsive to tourism once again. With that, we expect the new tourists to come in from around about December. And from January, hopefully, we can attract at least 1 quarter of the tourists that we had in 2018. If that happens, that will be a substantial inflow, which we are expecting to have. And that's the overall plan. But we have already, as you know, unfolded the 6 months very clear plan of the new inflows that we are also looking at. In fact, the non-debt inflows, which will involve the monetization of certain underutilized assets, is one of the key strategies. And we're expecting that to materialize in due course.
So, Mr. Cabraal, does that mean, I mean, it may be too little for the January $500 million bond payment. You also got to pay back a $1 billion bond in July. You know, in the interim, do you need to go to the IMF? Is the IMF route totally off now?
IMF route is not necessary at the moment because we are comfortable about making repayments of the January as well as the July payments of the ISBs because we have got certain other inflows also lined up. And at the same time, we do find, I think, respond sufficiently to your earlier question, Rish, in that the global commodity prices have been rising. And that's one of the reasons why we need to ensure that the rupee exchange rate is also not rising and that we have a reasonable exchange rate so that the prices of commodities within Sri Lanka, particularly oil as well as gas, wouldn't go up too high. IMF would have probably have asked us to also keep the commodity prices to be reflected with the conditions within the economy itself, which is what we are doing now. And we are also looking at new inflows like what I've explained to you. So it's kind of a program that we have put in place, which could sometimes mirror a possible IMF program as well. So that's why we believe without inflicting any pain to our creditors, since we are able to manage, we don't want to go any further than that because we are comfortable about making all these repayments.
Okay, you mentioned other funds. Tell us what they are. And my second part of the question is the next meeting live as well? And could we expect a hike anytime soon?
That's an interesting question. The rates that we have now are appropriate for the time being. And I believe the response of the markets is that we are still in the pipeline to have a few more adjustments in our policies, but may not be a rate decision. We would have other policies being put in place to ensure that the forex is converted. We will have other policies like the transmission being a little faster. We would bring in other macroprudential policies that would ensure that the banking system becomes even more sound. Those policies are very much on the cards, but the rates itself, I think, are sufficient for the time being. And unless there is some extraordinary situation emerging, we would think we can keep these rates at the same levels for a reasonable period of time.